Welcome. Today I am going to cover a very important area, the scheme which is announced by the central government. That is nothing but emergency credit line guarantee scheme. This will be useful to all the persons who are doing business in India. Because of COVID-19, our country has suffered very tight conditions. So to remove that, the central government has introduced this scheme in a bid to provide relief and credit support to businesses, especially MSME. Our Finance Minister Nirmala Sitharaman had announced rupees 3 lakh crore collateral-free automatic loans on May 13, a day after Prime Minister Narendra Modi unveiled the special economic zone, a special economic package of rupees 20 lakh crore. The Finance Minister has said that this scheme will benefit 45 lakh small businesses. The Guarantee Emergency Credit Line facility was approved by the Union Cabinet on 22/5/2020. The name of the scheme is called as Emergency Credit Line Guarantee Scheme, that is ECLGS. I'll say if it is a scheme, that means it is ECLGS. Then the credit product for which the guarantee will be provided under the scheme shall be named as Guaranteed Emergency Credit Line, that is GECL. So this is the thing we ought to remember. The scheme means it is Emergency Credit Line Guarantee Scheme. Now I'll discuss about why this scheme is introduced. That is, what is the purpose of the scheme? This is to provide 100% guarantee coverage for the GECL. GECL means that is a loan product. So what is the expansion of GECL? It is Guaranteed Emergency Credit Line. It is a guarantee scheme announced by central government. So this is a clear indication that the government is helping the public through bank by way of giving guarantee to the bank. It's a central government guarantee. It is a pre-approved sanction limit. That is, the scheme said it's a pre-approved sanction limit up to 20% of loan outstanding, and it is not the sanction limit as on 29/2/2020. So here you have to remember, you have to see it is up to 20%. If the bankers feel that this customer is eligible for 10%, then they can sanction. So the limit is up to 20%. So of the existing loan limit, the banker can go only on the outstanding balance and not the loan sanction limit. In case if a borrower has limited the amount into the account below the sanction limit, then that borrower is not eligible to be covered under this scheme, because the word they used is loan outstanding and not loan sanction. So we expect that this may be rectified in future. We'll hope, because some customers, in order to avoid interest, what they will do, they remit the amount into the account. We will hope this point will also be covered in future, and at present it is only loan outstanding and not loan sanctioned. As on 29/2/2020, it is available to all eligible borrowers. What are all eligible borrowers? We will discuss later. The scheme is applicable in the form of additional working capital term loan facility. It is not working capital loan, it is additional working capital term loan facility to be sanctioned by the bank or by the NBFC in case of term loan, and MLI. MLI means member lending institutions. We will see what are all MLI, that is member lending institutions, later, including interested PMMY, that is Mudra loan borrowers. They can also avail the benefit under this scheme. This is only a guarantee scheme. guarantees given by central government to bank in turn they have to sanction loan. All the additional working capital loan sanctioned up to 20% are covered by the scheme. This scheme is effective from 22/5/2020 because the date on which the cabinet approves the scheme. And with reference to this, the finance minister has revised the definition of MSME. And the revised MSME scheme is the investment in plant and machinery plus the annual turnover. This is a new term they have introduced. Previously, it was only investment in plant and machinery. Now they have revised to investment in plant and machinery plus additional turnover. With reference to micro, MSME, micro means investment less than 1 crore and turnover of 5 crores. That is called micro unit. Small unit means investment less than 10 crore and above 1 crore and turnover up to 50 crore. Less than 10 crore, they are called as small unit, and turnover, and they use the word not or, and both the terms should satisfy. Turnover up to 50 crores. And medium is investment less than or up to 20 crores and turnover of 100 crores. Up to 100 crores. They are called as medium enterprises. This is a new definition given by the government with reference to MSME classification. And now we will discuss who are all eligible borrowers. Eligible borrowers means all business enterprise are MSME institution borrower accounts. Here, business enterprise is not clearly defined in any act, but bankers, they have to define, and it is the banker's responsibility to consider the persons who are all eligible under business enterprise. Enterprise is defined by MSME, but in MSME, traders are not included in the enterprise, but here the circular says it is business enterprise. So I think everyone will be included, and a clear-cut instruction has still to be given whether traders are included in the definition of business enterprise. And all the proprietorship, partnership, registered companies, trusts and LLP are eligible to be treated as eligible borrowers under this scheme. So then commercial vehicle loan taken by the entity are called as an entity. If you take, then they are called as eligible borrowers, and not the loan taken by the director or promoter in individual capacity is called as, they are not eligible to be treated as eligible borrowers. Mudra loans, with reference to Mudra loans sanctioned on or before 29/2/20 are eligible to be covered under the scheme, provided the same has to be reported in the Mudra portal. They are eligible to be covered under this scheme. Then only loans sanctioned to primary co-applicant are also to be called as eligible borrowers. Then loans sanctioned in individual capacity, just like housing loan, personal loan, are not covered under this scheme. So loans provided in individual capacity, loan provided to the entities are to be treated as eligible borrower, and not the loan sanctioned to individual capacity. This you have to see as an auditor, as a borrower, you have to see whether these are included in the scheme. The scheme is valid only for the existing customers on the books of MLI. First, this scheme is eligible only for the existing borrowers. So new borrowers are not eligible to be covered under this scheme. So these eligible borrowers, the existing borrowers, should be on the bank records as on 29/2/2020, and the overdue in that account should be less than 60 days. If the overdue is more than 60 days, those customers are not eligible to be covered under this scheme. So that is SMA 0 and SMA 1 are eligible for the scheme benefit. So this point you have to bear in mind. So if your account is overdue for more than 60 days, then you are not eligible to get the benefit under this scheme. This is nothing but SMA 2, that is exceeding 60 days. and NPA accounts, non-performing assets accounts, are not eligible to be covered under this scheme, and the cutoff date is 29/2/2020. So NPA accounts and SMA account category advances as on 29/2/20 are not eligible. Then next thing is the loan outstanding. It is not loan sanctioned. It is loan outstanding up to 25 crore. Put all together, all loans as on 29/2/20 are eligible. It is not only per bank limit. Suppose if the borrower has availed loan from some 2 to 3 banks, then they are also covered under this scheme, but the loan outstanding should be 25 crores. Then the total turnover should not exceed 100 crores. So 25 crores, up to 25 crores they can go. That is loan outstanding. It is not loan sanctioned. Then turnover up to 100 crore are to be covered. The turnover as on that is for the period from 1/4/2019 to 31/3/2020, that is financial year 1920, the turnover up to 100 crores are considered under this scheme. Then these accounts have to be audited. This is based on the audited statement. If the audit of accounts for the year 1920 has not been done, then a self-declaration has to be obtained from the borrower by the member lending institution. We will see the definition of member lending institution later. MLI, we used to call it as MLI. So if audited accounts are there, then it's okay. If there is no audit of accounts, then MLI has to get a self-declaration from the borrower. Then the loan past due up to 60 days are only allowed. That is, the dues up to 60 days are allowed. Then above 60 days, then they are not allowed. Then borrowers under Pradhan Mantri Mudra Scheme, Mudra Yojana, that is PMMY, are also eligible to be covered under this scheme. Guarantee cover means maximum cover available per eligible borrower of the amount of default. They say use the word default. So 20% of on 25 crores, that is up to 5 crores, guarantee cover will be given by the central government. This guarantee cover would be 100% of the amount of default. So only that is any amount, that is the limit, loan outstanding is 25 crores, then the guarantee cover is available up to 100% of the amount of default. So these are the conditions they have to state. And with reference to MSME, it must be a GST register one unless they are exempted from GST registration. So with reference to MSME, only GST registration is must, but they are exempted from GST registration. Then acceptance to the scheme is only optional to the eligible business enterprise or MSME borrowers. So the MLI, that is banks, they offer the borrower to avail the loan. It is up to the borrower to decide whether to accept the additional working capital term loan or not. It is only optional. It is not compulsory to the all eligible business enterprise and MSME borrowers. In case of the loan outstanding is below the sanction limit, then that unit is also eligible. This I have already explained, because sometimes the customers would have remitted the amount into the account which is below the sanction limit. That is, their money is deposited in the account. Those customers are not eligible to be covered under this scheme at present. So that means they are not eligible for any additional finance. Inclusion of trading activity is not clear from the circular issued, but when the circular says business enterprise, we may include trade, but the same has still to be specifically confirmed by the ministry, but because MSME definition excludes trading activity. For the purpose of this scheme, it is not necessary that the existing loan borrowers should be covered under NCGTC or CGT MSME scheme, or should be also covered. Suppose in case the borrowers have already availed the loan under CGT MSME scheme, they are also covered to be it is only additional working capital. So existing loan is different. So any subsidy, anything, that's a different thing, and this is different. This is only addition, but all the conditions which we have stated for the eligible borrowers should be fulfilled. And now we will define who are all called as member lending institution. Banks shall include all scheduled commercial banks. So they said all scheduled commercial banks are included in the definition. So it is an inclusive definition. That means not only scheduled commercial banks, but other banks, they can also apply to the central government to get the benefit under this scheme for their customers. And financial institutions as defined by the RBI Act. Then NBFC are also non-banking financial companies. They are also eligible to be covered under this scheme, but they put those NBFC should be in operation for a period of 2 years, that is prior to period of 2 years as on 29 to 2020. So NBFC, if they are not in operation or below 2 years, they are not eligible to be covered under the definition of MLI, that is member lending institution. Then what is the tenor of the scheme? That is from the date of sanction, from the guarantee sanction date to the tenor of the loan under the GECL. That is normally it is 4 years. So that is called tenor of the scheme. Then next we will discuss loan amount eligible under the guarantee coverage. What is the loan amount eligible to be covered under the scheme? We will have a small discussion in it. Additional working capital term loan and term loan. And this is up to 20% of the total loan outstanding, and the loan outstanding amount should be up to 25 crores as on 29 to 2020. So loan outstanding as CC, term loan, working capital term loan, that is already which is in existence, as per the balance sheet are eligible. So off balance sheet items, that is in case a guarantee is invoked but not paid by the bank because there is no confirmed liability, because the liability has not taken, that is called off balance sheet items. And non-funded advances are not eligible for the scheme. MLI, before sanction, they have to check all the CIBIL for the overall outstanding, because the borrower might have borrowed from some other banks also. So to check that, it is the duty of the MLI to verify and confirm that the borrower has not availed any loan from anywhere except this, and if they avail, they have to put all the limits together and they arrive at the eligibility. MLI has to open for this additional working capital term loan, they have to open a separate bank account to grant this credit facility. Then existing PMEGP and PMMY would also continue in the same account, and this is additional facility, hence the separate bank account has to be opened. So with reference to this scheme, the bankers, that is MLI, they have to open a separate bank account. Existing loans, they should continue just like that, and this is only it is only a working capital term loan, this is separate. So up to 20% only allowed. So if a borrower has availed a loan from say 3 banks, then up to 20% of every bank they can give. But all put together, the loan outstanding should not exceed 25 crores. That point the banker, they have to confirm. In case other banks, they said we will not give, then if the particular bank, say A bank wants to give, considering that limit also, then the banker has to get no objection certificate from the other bank. And once again I will say that only the existing loans are eligible to be covered under this scheme, and because of this, due diligence is very, very easy. With reference to interest rate, for banks and financial institutions, lending rate is linked to one of the external benchmark rates prescribed by RBI plus 1%, subject to a maximum of 9.25% per annum. For NBFC, the interest rate should not exceed 14% per annum. And to sanction this limit, there is no processing fee, but other charges may cover, just like in the form of document charges. And if there is any other charges, they can cover, but there is no processing fee. Normally, when they give additional limit, penal interest has to be charged for the original loan, but this is here, it is not the case. No penal interest has to be charged because of this additional loan. And the banker, what is the nature of account and tenor of credit under the scheme, that we will explain once again. A separate bank loan account has to be opened for this additional working capital term loan. It is not a working capital loan, it's a working capital term loan. And the tenor is 4 years from the date of disbursement, including 1 year moratorium. So there are in total the borrower has to pay in 4 years. Only 1 year is moratorium. That means the remaining the amount has to be paid within 36 installments, either in the form of EMI or principal plus interest. The term has to be fixed by the bank, but moratorium interest has to be serviced as and when debited. So moratorium interest has to be paid immediately as and when the bank has debited. And in case the borrower wants to close the loan, prepayment, if they want to make, there is no penal interest for the prepayment charges. RBI approval has been solicited for keeping risk weight for loans provided under GECL at 0. And with reference to security, it is pari passu with the existing credit facility, but the charge has to be created. You know that every bank has to create a charge for this additional loan within 3 months from the date of dispersal, and no additional collateral security is needed because it is the guarantee is given by the government. So additional collateral security is not required. And with reference to guarantee fee, for all other guarantee credit schemes, the borrower has to pay guarantee fee. But with reference to this scheme, that is emergency credit line guarantee scheme, no guarantee fee shall be charged. So this point you have to bear in mind. No guarantee fee, the bankers, they have to charge. What is the extent of guarantee coverage? This guarantee coverage is being given by, one separate trust company has been formed by the government, that is National Credit Guarantee Trust Scheme, Trust Company, National Credit Guarantee Trust Company. And hereafter we will say trust company means it is NCGTC, that is National Credit Guarantee Trust Company. This company gives guarantee up to 100% of the loan outstanding till that account becomes NPA. Up to the date of NPA only the guarantee coverage is being given. After that, no guarantee will be given. Only when the account has become NPA, the banker, they have to make a claim to the trust company. So only up to that only the guarantee cover is being given by the trust company. Now, under this scheme, some borrower has become default, and that account has become NPA. So the MLI has to inform within 90 days of that account has become NPA. So the additional working capital term loan has become NPA, and the MLI, that is the bankers or NBFCs, they have to inform the trust company within 90 days. NPA date is there, from there add 90 days. Within that 90 days, they have to inform the trust company. Then immediately on receipt of that claim made by the MLI, that is banks and NBFC, the trust company has to pay 75% of the guaranteed amount within 30 days of preferring the eligible claim by the lending institution, provided the claim is correct. The claim has to be submitted by MLI, and the trust company, they will verify whether that claim is correct. Then immediately the trust company has to pay 75% of the claim amount to the bankers or to the NBFC. Then the remaining 25% of the guarantor amount will be paid on the conclusion of the recovery proceedings, because they have to initiate the recovery proceedings. Then the remaining, after recovery amount, then this remaining 25% will be paid on conclusion of recovery proceedings or till the decree gets time barred, whichever is earlier. So initially the trust company will pay 75% to the MLI, that is banks or insurance company. what is the responsibility of MLI after invoke of guarantee? Now, guarantee is being invoked, 75% is being paid by the trust company. What is the duty of the MLI now? Post invocation, any recovery has come, the MLI has to first adjust its legal cost. Then remaining balance has to be remitted by the trustee company, by the bank, by the MLI, that is banks and NBFCs, to the trustee company. First they have to adjust legal cost, the remaining amount, this MLI, they have to return to the trustee company because they have already paid 75%. So remaining balance only the guarantee is being done. What are the other matters that are important with reference to this scheme? That is, the agreement or MOU has to be entered by MLI with trustee company for sanction of the scheme, or for sanction of the loan under this scheme. Otherwise, the guarantee claim will not be possible because if there is no agreement and MOU. And MLI has to submit fortnight report to the trustee company about the borrower in order to have the follow-up of the schemes. Every fortnight they have to submit the report. Lending institutions are expected to be liberal in sanctioning the loans, but subject to credit appraisal and due diligence about the borrower. Though they are saying that it is automatic credit, the limit has been fixed, but the credit appraisal has to be done by the MLI. Lending institutions have to safeguard the primary security created out of this additional loan, and the duration of this scheme is from 22/5/2020 to 31/10/2020. Only for this period the scheme is eligible. So MLI has to submit, the amount has to be utilized, the amount sanctioned, that is up of 3 lakh crore, this 3 lakh crore have to be utilized on or before 31/10/2020. That is, the scheme has to be utilized before 31/10/2020, or utilization of 3 lakh crore, whichever is earlier. Then MLI has to submit default ratio as well as NPA ratio to the trust company on fortnight basis. Claim has to be made in time by MLI as it is their responsibility, because it is not the duty of the trust company to receive the to instruct the MLI to submit the claim. It is the duty of the MLI to submit the claim in time. Otherwise, the trustee company will not make any payment to the MLI. It is the primary duty and responsibility of MLI to recover the dues, though the loan is guaranteed by the trustee company. It's a guarantee is there, but just like regular business operations, the MLI has to do the recovery proceedings. MLI has to follow the instructions issued by the trustee company from time to time. Then lending institutions have to inform and get the permission of the trustee company in case any compromise or settlement negotiation with the borrower is taking place. This they have to inform, get the permission of the trustee company, because the interest of the trustee company will be affected. So for this they already they have given the instruction. Then borrower is not allowed to create additional charge over the property created out of this additional loan, and the lending institutions has to get documents signed in this regard. The credit, that is the trustee company, is entitled to do the modification of the scheme as well as per the instruction given by the RBI. Then some banks say that pre-release audit has to be conducted within 30 days from the date of disbursement, and the waiver of doing that audit has to be done with the permission of the zonal office of the bank. This is for some banks, they are issuing this reference. Then the branch has to take all follow-up action with reference to the monitoring of the accounts as per the head office guidelines, and the bank has to follow all the instructions given by the RBI from time to time. This is a very, very beautiful scheme. I suggest that all the existing borrowers have to approach the bank immediately so that their finance position will be going in good direction. If they will be in positive, they will do all type of business without any financial strain. So this is my presentation with reference to the scheme emergency credit line guarantee scheme announced by the central government. And I wish you all the best. Thank you. Nandri Vanakkam.